been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is a real estate investor, Sterling Anderson. Now, Sterling is the president and CEO of Red Oak Development, formerly Sterling Capital Investments, a real estate development and investment company based in Omaha, Nebraska. Now, his company invests in and develops single-family, multifamily, and hotel properties. Now, in today's show, we're going to really place an emphasis and take a deep dive into the hotel or hospitality sector and really discuss the reasons that Sterling and his group are so bullish in this space, given the current challenges that it's facing as a direct result of the global pandemic. The hospitality industry has been the hardest hit sector in the commercial real estate space. And so excited to be chatting with Sterling here today about, really what his group's doing, why they're so bullish on that sector and, how they're making moves and, calculating the risk accordingly. So with that, guys, I'd like to welcome Sterling Anderson to the show. Sterling, how you doing today, bud?
I'm good, man. Thank you so much. Trying to stay warm on this cold Omaha afternoon, man.
Yeah, to give you guys some context here, it's February 16th as we're recording this, and the country is in a crisis. Outside of the pandemic, it's in a weather crisis right now, and parts of the country that typically would probably still be cold. Nebraska you'd probably still have temperatures in like the teens or maybe the 20s.
Teens and 20s. Mm-hmm.
Yeah, but now it's down in the minus teens.
Right. It's so crazy, man.
Yeah, that's you step outside too long without exposed skin, and you're not going to have that skin much longer. So in any event, well, I'm glad you still have your power on. Things are good for the time being. Wishing you and your family well through this, and hopefully you guys get to stay warm. Sterling, what I'd like to do to start the show off here is kind of pass the mic back to you and ask you to take a few minutes and tell our listeners a little bit more about yourself, your background, and ultimately how you found your way into the retail space or the real estate space, not the retail space. The real estate space.
Real estate space. Yeah. For me, it goes all the way back to, goodness, I've been in the business, I think, since end of 2010, beginning of 2011. I had came across, of course, wholesaling, and that was my first entry into the business. So from 2010 to 2013, I did a lot of wholesaling, and I was doing loans and underwriting at Bank of the West. And this lady had called and cursed me out because we didn't send her title after she had paid off her vehicle. And so for me, I was kind of at that point where it's like, okay, got some money in the bank, I can make this move now. Let's go ahead and go for it. So I left that day. They sent me home that day. I'll spare you the details of that phone call. But they sent me home that day. The next day I went back to grab my stuff. And that's the last time I worked for anybody. It was January 13th of 2013. Okay. And so I've been full-time in real estate ever since. So from there, it was still wholesaling, then got into fix and flips, met my then mentor, still mentor and friend, Grant Cardone, who pushed me more so into the multifamily side of things. And that's what it's been, for the better part, now of the past 3-4 years is, more multifamily, still doing some single family things. But within this past year now, we're at the hotel space and excited to do some things in that space and getting into new developments too. So the past 2-3 years have been the most game-changing years, I call them, of me being in the business.
Okay. Well, fantastic, man. Well, congratulations on quitting that 9 to 5 and taking the leap of faith. And I'm guessing that it probably wasn't all rose petals back then, right? I'm sure there was some stress. I'm sure there was stress from a family level. I think you're married. I believe I'm looking at your Facebook post. You're married. You've got some children. So it's not just, Sterling trying to take care of himself and worrying about the roof over your head. You've got the roof over multiple others that rely on you. And
exactly.
So, I want to spend most of our time talking about the hospitality industry, because I know that's you've wholesaling, the fix and flip, the multifamily. But again, you really over the last year, you've gotten incredibly bullish on the hospitality industry, and that's what really prompted me to reach out. It's funny how many friends you have on Facebook. Like you and I've never met each other. However, I see your posts and I see what you're doing, and I took notice that you guys are really placing a laser focus on the hospitality sector, which again, as we know, is the hardest hit. It just is. It's unfortunate, but the pandemic has caused a lot of challenges for that industry. Unless you've got a hotel on the beach somewhere warm, you're probably suffering. Your occupancy levels are a fraction of what they were, probably same time last year. I guess So we're basically literally a month prior to all hell breaking loose, basically, which is crazy to think that it's a year. It's been a year so far. So let's talk about the hospitality industry. I guess first and foremost, what has attracted you to the space? Again, given the current environment that we find ourselves in today, what really, made you put your ear to the grindstone and say, "Hey, there's something good here. There's something exciting. I want to be a part of it." What was that?
Yeah. Well, I mean, from the hotel sectors in general are, it's a really high cash flow business. And even right now is such a great time to get in. I mean, there are some operators who are hurting, who need to sell, and we definitely want to be there to help them. There's going to be plenty more coming down the pipes. We see them every day. Also an opportunity to save jobs. Of course, that's been the biggest thing, during this pandemic has been the loss of jobs. So if our group is able to step in and, buy that hotel or, buy the note, and we can certainly get more into that and save those jobs, that's definitely something that we want to take a look at. But overall, now is just a really great time to get hotels at a discount, well below replacement cost, and be able to make those things happen that way.
Are most of the hotels that you're getting at a discount, are they bank forced sales, or are these just owners that have kind of said, you know what, man, like I've run my time in the space, maybe the writing's on the wall, I'm just going to go ahead and exit out now and call it a day? I mean, what are the typical distress moments? I know that a lot of banks outside of Wall Street tied banks, such as CMBS loans, regular local, banks and credit unions, for the most part, again, I'm just being very general when I state this, is that for the most part, what I've gathered is that they've been willing to work with borrowers because everyone's kind of in the same boat. Everyone's having the same challenges. And so, what are you seeing as, what is the direct result outside the pandemic? But where are these distressed sellers coming from at this point in time?
Yeah, a lot of them are we're getting, directly from the seller. There's some hotel brokers out there that, of course, we work closely with. So we'll get some leads and tips from them. But a lot of it has just been, direct to seller. And they're just at that point, where they're needing to sell. I mean, you have some other ones that are, going up for auction and doing it that way. So really nothing from directly from the banks, although we know that's where a lot of that inventory is starting to come from. And then, on the flip side too, banks are kind of putting a hold on lending on any of the hospitality side. So we had a couple of lenders that we were going to be working with, and they decided as of last week they're not going to lend on any multifamily properties right now. They're waiting to see what happens, with vaccines, and waiting to see what happens with, tourism and things coming back. So I see a little bit more of that stuff happening. I mean, you have your majors like CBRE who are still lending, and who we are working with on the current deals that we do have. They're still the players in the game. But for the most part, you have some lenders that have stopped, or at least put a pause on lending in hospitality right now.
Got it. Speaking to discounts, I mean, maybe using some of the recent acquisitions that your group has done in the hotel space. I mean, from pre-pandemic pricing, what type of discount are we talking about? You mentioned below replacement cost, but I mean, if you had to use pre-pandemic pricing, what type of discount are we talking about? 20%, 25%, 10%? Yeah.
Usually within that 25 to 30% is what we've been seeing. I mean, like the country inn and suites that we have, we're getting at about $1 million below replacement cost, which is really great, especially for for that particular brand. So you'll run into to stuff like that, but usually that between that 25 and even 35% is really what you're looking at.
Okay, how do you run pro formas looking at historical data, knowing that this past year has been basically, you might as well throw it in the trash can. And also, we don't know when the rebound really will happen and how fast, more importantly, how fast it will happen, right? Like, I'm sure that, across the board, I'm sure that most hotels or most markets are seeing an uptick of activity, right? But certain parts of the country, it's going to be much slower to rebound.
Oh, yeah.
There's like for down here in Florida, down in the beach, you go down to Clearwater Beach, you never even know. I'm sure the hotels literally have been sold out for the last couple of months.
I'll bet. Yeah.
So again, back to the original question, how do you run pro formas? How do you guys make a determination of, this is going to be a good investment at this price based on what data? Yeah.
And that's really, we're looking at, of course, ADRs, your average daily rates. We're looking at that. We're looking at, of course, the past performance of that property. What's happening currently in that city? Is it going to be something? And you're paying attention to what local government is doing. That certainly has a bearing on where we are with the property as well. And then paying attention to the industry. I personally think that we'll see a big increase in travel coming back in 2022. And then especially with international travel. So I think that that's going to be, our biggest play there. So, essentially with these hotels, you're buying them, planning on holding on to them for a good 4 to 5 years before you really just, make that turn and decide, okay, then we're going to keep these or we're just going to go ahead and stabilize them and sell them. And that's the play. But ideally, getting into that, paying attention to those models, looking at things historical, looking at what's happening in that city, paying attention to city government and what they're doing as far as the pandemic, those things all weigh in and play a factor into, whether we're going to make an offer or take an interest in that hotel, not just what that hotel is doing specifically. We want to pay attention to all of those metrics when we're going in.
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my 2 podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche, and that's the phenomenal niche of mobile home park investing. Now, for those that don't know, I've been a full-time real estate investor for more than 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in Growth and Income Fund 3. When you invest in our fund, you get immediate diversification into multiple deals we acquired off-market that are already performing and have built-in sweat equity. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please visit us at investwithsunrise.com and request access to the investor presentation. It's absolutely free, and you'll get instant access to review the off-market deals that we've already purchased that you can co-own with our team. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-227-4359. And our investor relations team will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule the call. Let's jump on the phone. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show.
The Country Inn and Suites, is that one that you recently acquired?
The Country Inn and Suites is one that we have under contract now. So there's three. There's three that we have under contract now. It's a Country Inn and Suites, a Holiday Inn Express, and a Hampton Inn and Suites. And all three of them are from the same seller. And then he also has 14 more that he'll be looking to sell down the line here too. So we're one of the first in line to get that phone call when he's ready.
Can you share what market that's in, or is it?
That's in. Well, it's all three properties are in Carter Lake, Iowa, which that kind of butts right up to Omaha, Nebraska. Omaha, Nebraska kind of cuts into Carter Lake. We share that with them. We share an airport with them. Okay. So it's like you kind of come around this bend, you're in Carter Lake, and then you're in Omaha. So it's kind of one of those things. But we're 2 minutes away from the airport, 2 minutes away from TD Ameritrade Park, which hosts the College World Series every year. So it's a really, really good located, hotel. And there's also another piece of land which we thought about doing a sports bar. Once things kind of clear up a little bit, we'll talk about that. But yeah, it's a pretty good located, hotel, all three of those, and they're right in line of each other.
Okay. And so using those as an example, maybe give some, stats on, where they're at today as far as occupancy, and then, where do they need to be at what given point in time? Is it 12 months out, 18 months out? Like, do they need to be back up to 70% of historical, occupancy, or like, what is that, what are you guys planning for with the acquisition of these three? And what are you hoping for as far as a rebound in that particular marketplace?
Right. So the two that are performing pretty well right now and have been performing well are the Express and the Country Inn and Suites. Right now, they're about. And I usually get the reports weekly. The owner sends me reports of where we were at occupancy wise, for the previous and current week. So right now they're at about that 60 to 70%, occupancy, which is great. But again, they're by the airport. They have the airline contracts. They have different vendors, so they stay pretty full. And each hotel feeds off of one another. If one is full, you can push them over to Hampton. If Hampton's full, you can push them over to Country Inn and Suites. The one that has the issue is going to be the Hampton Inn and Suites. Hilton, as that brand, was so geared towards a business traveler, but a lot of the business traveler is all but gone right now. Mm-hmm. So you have to market to a whole different type of person for that type of Hampton brand. So we've tossed back and forth as far as what we'll do to turn that around. Obviously, we'll get that hotel a little bit more of a discount because, you do what we call lot drive-bys, where you drive by different hotels and see what that parking lot looks like. And that'll kind of give you an indication, too, of what the occupancy is of that hotel. Country Inn Suites will be doing good. Express will be doing good. There's nobody at Hampton, maybe except for one car or two, and that may be the manager that's on duty that day. So you've got a full, you got a hotel that's just sitting completely empty. So that's something that we have to revisit and do that. But ideally, we would like to see, these hotels back at 80, 90%, capacity within this year. But again, that's going to depend on what happens with this vaccine, how tourism comes back. But things are starting to loosen up and soften here a little bit. So we do see that coming by year's end.
Will you be placing debt on these properties, or will it be a cash purchase?
Yeah, we play some debt. So we'll do debt, both debt and equity is how we went into it with these. CBRE looks to be the one that's going to do all three of them, and they'll close actually in succession. So Country Inn Suites will close, Express will close, and then the Hampton will close next, all within a month a month period.
Got it. How difficult is it to pivot? Like using the Hampton Inn, right? The example of the Hampton Inn, it was nearly 100% geared towards business travelers, and we're gonna talk to that subject a little bit because I want to discuss what the future looks like there, right? I mean, a lot of companies have been forced to be remote, and some have adapted it quite well, some haven't. I think there's a certain sectors that will ultimately go back to an office or some type of hybrid thereof. But we can talk about that in a moment. So how difficult is it to truly pivot that Hampton Inn brand and really start gearing it towards the types of folks that might be staying at the Country Inn and Suites and the Holiday Inn Express? I mean, is that allowed by the Hilton, who is the really the parent company of that flag?
Yeah. So, I mean, and that's really where it starts too. It starts with that parent company. It starts with, having to adhere by what they feel. You can have any idea in the world that you want, but if it's not approved by IHG or Hilton or Radisson, then that's really an uphill battle that you're facing. But they have opened up to working with hearing more ideas on how to turn that particular brand around. So a lot of ideas will go forward. I do see them loosening up, changes that can be made with that particular brand, even relaxing, things when it comes to PIPs or property improvement plans, maybe having some delays or not having to hold. In fact, no, you have to hold a certain reserves for PIPs every year, and Hilton relaxed that this year. So there's no, operators don't have to complete a certain amount of PIPs or do anything this year with their brands. And of course, that being because of the pandemic and losing a lot of its customers. So Hilton will have a hard time, coming back on that part. But as long as they're receptive to ideas that can be brought forward, I know there's been a whole big talk of conversions. Then that's a whole other thing, whole other beast with that. It'll definitely happen. It's just going to take some real good fine tweaking to make that brand work.
When you speak to conversions, you mean a conversion to like a multifamily type property or just a different type of hotel?
Yeah, so conversion to multifamily. We actually had one where it was a Sheraton that we had here in Omaha that we were going to convert. And so that project went from 18 million to 35 million. And at that point, it's just like, no, there was no way we were going to undertake that. We were going to lose 100 rooms and then take out the pool and the convention center and build another 150 because the site allowed for that and the area allowed for that. And that would have been a good project. But man, the dynamics of trying to do a conversion, if you're going to do that, you really have to be on point going into a project like that.
Well, I'm sure, especially when I don't know the age of that hotel, but I'm assuming it was probably built like the 70s or 80s. So
70s.
Functional obsolescence there. I mean, the plumbing, the infrastructure,
right.
Even ceiling heights. And I mean, just the layout isn't really conducive to probably what the layout might be today in a multifamily project. And so at some point, you're just better off scrapping what you have there and starting fresh. I'm guessing that's where you guys got to.
Yeah, pretty much. Pretty much.
So specific markets outside of these three hotels that we're currently working on, what are some of the other markets that you guys are hot and heavy in or on, that you're excited about based on the local governments, how fast they're rebounding, what are those markets and why?
Yeah, Atlanta, and this is for both multifamily and hotels. Atlanta is like our number 2 market. Love Atlanta for the opportunities. You can build a nice size portfolio of multifamily and hotels just there alone. So Atlanta's a hot focus. Government and a lot of the regulation that's happened there has kind of eased up a little bit too in favor of more of the operators and developers, which is great. Same thing with Kansas City. We're here in Omaha, we're about 2.5 hours north of Kansas City. So we'll just hop on 29 and head on down. Kansas City is another great market that, for the hotels, and that's been pretty popular there too. Same thing with conversions there. So between Omaha, Kansas City, Atlanta, we're looking at also Dallas and Phoenix as well. Can't wait to get out to Phoenix. Phoenix has some great opportunities coming down for hotels and looking forward to getting out there.
Mm-hmm. What are some of the risks you feel associated with, some hotels, maybe not the, like the limited service hotels that we're talking about, like the Holiday Inn Expresses and the Hampton Inns, what have you, but the hotels that, that also cater to conventions and meeting. They have large meeting spaces. What do you think the future really holds for those types of outfits that, their convention business or their meeting business is a large line item in the revenue side of things?
Mm-hmm.
And how soon will this world be comfortable again with, a room that's really meant for 300, if you can only rent it out to 100 people or 75 people, like
right.
you're losing money, right? Like there's not even a reason to do that if that's the case. And so what does the future, you think, hold for those types of hotels? And are there opportunities there, do you think, or does the risk not necessarily meet the potential reward associated with, not knowing when that event space or that business might come back?
I think there's definitely opportunity there. There are some that are testing that now, albeit against some rules. It's kind of testing, okay, how is it still possible to just book it? Let's just book, this particular conference. And as we get closer to that date, let's see what's happening. So I see a lot of that stuff going on too. I think a lot of owners are wanting to get back to doing the convention space because that was such a big part of their business. They don't want to let that go, and then it comes, okay, well, how do we maximize that space if we're not bringing it back to full capacity? So I think a lot of operators are looking at that too. The opportunities are definitely there. Everybody would like to see the whole convention space come back. I know there's a couple of conferences that I speak at, and they're talking about get back going in July, with their conferences. And those conferences usually pull in 2,000 to 2,500 people on any given day. So I think it's definitely coming. They don't just want to necessarily scrap the whole convention, part that easy. I think it's just kind of monitoring things and testing things out, and even moving forward with bookings, just to make sure that they're ready to go if everything just really jumps back to normal.
Yeah. You spoke to debt a little bit. You mentioned that a lot of lenders have kind of like put the brakes on for the time being, just again, not knowing when we're really going to pull out of this thing, how long it's going to take to roll out the vaccine, how long is it going to be until people get a comfort level. And so there's risk associated with placing debt on an asset that relies on people being comfortable and traveling, getting out and about. CBRE is still lending in the space. So what type of terms or how have their terms been adjusted? Again, using the example of maybe these 3 different deals you're working, 2 of them that are not 100% stabilized, but they're doing fairly well. With that third, really, it's it's not doing well at all in comparison to pre-pandemic numbers, right?
Right.
What type of debt's available in today's world for deals such as those?
Yeah, there's still some debt out there where you're getting, especially in the commercial space, you're getting, that, well, now it being 75 to maybe even 85% LTV. You take something like the Hampton, where I don't even think we cleared 62% LTV on that one. That one it's going to be tough to do that one. So the debt is still out there. It's just, working with terms, how many years of IO can you get, a little bit more flexibility there with that as far as in what rates you can come in at too. So, there's still some good things out there, but they're grilling you so much on how are you going to turn around this property? How are you going to run this property for your investors that are coming into the property, for your main investors, or maybe you have a KP that's guaranteeing that loan. They already grill that person anyway. There's a little bit more scrutiny on that, at least from the hospitality side, as far as what they're doing. So a couple extra steps, in the lending space now. They just want to make sure this is where this property is performing. Yeah, we can lend on this property, but what are you going to do? What's the business plan to really turn around this property and get it to profitability to where, you can stabilize it, pay us off, and maybe we lend on another hotel for you. That's where lending truly is today with hospitality. But again, you do have those that, for right now, they're not planning on lending anything right now in the hospitality space because they're watching. They really take the watch approach.
The CBR, I don't know what CBRE's hospitality lending arm looks like. Are they portfolio loans, or are they just acting as a broker? Do you know? Are they actually holding these loans on their books? Or are they selling them off to the secondary market? Or are these CMBS loans that they're originating?
Yeah, they're direct. They hold them on their books.
Okay.
Yep.
Got it. Interesting. So let's talk about the operation side. Let's switch gears a little bit, and let's talk about the actual management, the day-to-day management. Obviously, with any a hotel property, there's lots of moving parts, right? I mean, you got just front house, back of the house, and everything in between, right? There's just lots of different pieces of that puzzle to make a hotel run efficiently and make it be profitable. And it's very easy to probably lose money as well in hotels if you're not, on your game with the operation side. So is that something that your team will ultimately do in-house, or will you outsource that to a third-party management group?
Yeah, we'll outsource it to third party. Luckily, the three that we have, here in Omaha, Carter Lake, now we're going to retain that management. We've built such a great relationship with them since we've been in this thing. That it's kind of one of those, if it's not broke, don't fix it type situations. And we wanted to make sure that before, we decided whether we were going to replace management and do that. But for any of the other assets that we're looking at, like the ones in Oklahoma City that we're looking at now too, those would be a replacement of management, just due to, what we're seeing in those hotels. A couple other things that we've heard about from just employees. That would be a complete switch in management. So those are things that you take a look at too. If there's already a good, synergy there, and the property's being well ran, systems are being well ran, everybody's on their thing and doing what they need to do, then no, it's just a smooth transition. But if there's things that are broken in the operational side, then obviously, you want to take a look at that and look at doing some third-party management on that side.
Is there ever a benefit of, getting rid of your flag, like literally, going away from the Hampton Inn and going, without another national flag and just making your own brand? Is there ever a benefit to doing that?
You know what? And I've heard that there is, and I've heard that there isn't. Number one, I mean, the flags hit you with such a heavy penalty if you decide to leave, their flag. I know one of my...
I'm assuming that contract only lasts for a predetermined amount of time, though, correct?
Right, yeah, predetermined amount of time. That could be 10 years, that could be 15 years, could be 20 years. I think the longest contract is a 25-year, and you renew it after that. If you decide to, hey, I want to separate from this brand and do that, you're usually paying between $800 to $1.5 just to terminate that contract.
Wow.
Just to terminate that brand. So, or that flag. So yeah, I mean, it has its benefits. Again, you have to be really, really heavy on the operational side. You won't have the support of that particular flag if you decided to start your own boutique hotel that way. But that's what a lot of hotel advisors that are out there for. We work with a great one. Her name is Devon Reeves of the Vaughn Group. And that's what she does. She's the youngest woman to own they own a Hyatt Place hotel, her and her partner, Jessica. And they're the youngest, to own a couple of those brands. And that's where she started. She started in the front office and went to management, and now consults with a lot of people in owning and buying hotels. So there's people out there that are like that too, that can help you out on the operational side if you decide to split away from that flag.
And what type of support does that flag offer you typically? And I know that everyone's a little different than the next, but what type of support should an owner of a hotel expect from a Hampton Inn or a Country Inn and Suites? I don't know who the Country Inn and Suites is owned by, but
Radisson.
Okay, what does that support typically look like?
Yeah, so it's everything from your systems to, of course, infrastructure of the hotel. Just making sure the biggest thing is systems. So everything ties into one central location system. Of course, they're responsible for a lot of the marketing as well. The main and parent company will do a lot of the marketing. You can do some yourself at a local level, but for the most part, that parent company should be doing a lot towards your market when it comes to advertising, making sure that your bookings are prominently placed, making sure that you have the support that you need in being able to run that hotel efficiently. Now, of course, you have to do your part by a lot of their policies and procedures. They give you these nice thick binders or PDFs that you have to read before you even, they even approve you to be a part of that brand. But the support is really there in the form of the systems and the operational and the management that should be supporting you and being behind you while you're running that hotel.
Is there buying power as well that you gain from being with a flag, like
Yes.
supplies and even new construction or improvements? I mean, is there true buying power there?
Yeah, definitely. And we've seen that, just kind of going through. We're pretty much we're finishing up our due diligence phase now. The buying power that you get, especially with goodness IHG, is amazing. There's so many different perks and credits and discounts and just being able to do more things, with that particular brand than there is Hilton and Radisson. Mm-hmm. But yeah, your buying power certainly increases if you're with a flag.
Got it. For those that are listening that have an interest in learning more about the hotel space, obviously, if you would said, hey, I want to get involved in multifamily or single family wholesaling or flipping houses or even now mobile home parks or pretty much any other niche, it's fairly easy to track down educational resources and info. How about the hotel sector? Where would one go or need to go in order to learn more, to really take a deep dive into the investment side of the hospitality industry?
Right. I was going to say surprisingly, but it's really not surprisingly, YouTube. This is going back to last year. Last year, we had decided to start the hospitality side of the company, but then COVID hit. So we put that on the back burner, and about October last year is when we decided to bring the team back together and start to move forward with it because we knew the opportunities were coming. But I hopped on YouTube and just looked up, how to invest in hotels. What does it take to own a hotel? Going to like the different flag sites, and they have like the franchising part of their website where you can learn more about the hotel industry. You can learn more about becoming a franchisee with that particular brand. That's a good way to do it too. The Vaughn Group, which I'm a part of, the VaughnGroup.com. She has a lot of, articles, a lot of PDFs on there where you can learn about, how to own, operate, or invest in a hotel. So there's a lot of different resources out there and just industry stuff out there that you can learn. But as I always tell people, certainly don't sit on that information. Definitely take it and run with it and implement it and put it into action as well, whatever you learn.
Just to clarify, the Vaughn Group, how do you spell that? We make sure that I spell it correct in the show notes.
Yeah, it's VONNE group.com, thevaugngroup.com.
Got it. Good deal. So Sterling, everyone always talks about the deals that they made the most money on, right? The ones that had the highest returns. Very few people ever talk about the challenging ones, the ones that just again, you lost more sleep than any other deal. You lost your hair, whatever it might be, right? Lost your marriage. I mean, just it completely went the wrong direction. What's that one deal for you? What's the deal that comes to mind? What happened? How'd you overcome it? And ultimately, what would you have done differently given the chance?
Yeah, I think we had a 40-unit development deal that we were going to do here in Omaha. And we were going through, the whole due diligence phase. We were raising capital. We had money invested into, due diligence and other expenses and everything. And then we had to exit that deal. We got to about, I think, a week before closing, and two of our equity investors had to back out. And so, of course, automatically that's phone call after phone call. Hey, are you able to come in? Hey, this happened. And we just weren't able to make up the rest of the equity, but we had so much capital invested. I had capital invested. I had other investors capital invested. That stuff has to be paid back. That don't go away. So now I have that, sitting on my head as far as, okay, well, now we've left this deal. I've got to return investor capital, which happened. But it's like, okay, I have to return investor capital. I think that would have to be the worst one. You can put together a deal. Yes, things happen. But the worst for me is being responsible for other investors' capital and you didn't perform. Mm-hmm. That has to be the absolute worst thing and worst nightmare in business, especially in this business, that you can have. Investors are entrusting you with their capital. They're trusting you to do what you said that you would do when they wrote you that check or sent that wire or whatnot. And when you don't perform, that's a whole different ballgame. Yeah. So I've learned a lot from there and put some things in place to make sure that doesn't happen. Of course, things happen. You always explain to investors that there's a risk of you not receiving your capital back. But for things like that, where a lot of things could have been avoided, we learned that lesson and, and certainly bounce back from that.
Yeah. What are those things? I mean, what would you have done differently, again, given a chance? Going back in that same scenario again, what would you have changed? Or what have you changed? I guess I could say it that way.
Oversubscribing on deals. I'd rather raise too much and, have to give some back than not, have to raise enough. Making sure that those investors are upfront, with those commitments. Now, which what we didn't do before, where we were just starting, as far as hopping on the phone, like any investor that comes through the portal, we make sure we hop on the phone with them just to see what their investment expectations are. We let them know our expectations, and we're able to have that dialogue as far as placing them into a good investment and making sure that once we're ready to go, they can go. It's not, okay, yeah, you can put me down for, 50 or 100,000. And then the time comes where we need to do that and you ghosted me. So now we avoid that whole, part of the conversation, right there. And we're just in a better position to raise capital, have that capital committed, and not have to back out of any deals. Because I didn't want to be known as that guy either. I can put properties on a contract, but I can't close.
Right.
I didn't want that either.
Sterling, what one final golden nugget of advice or wisdom could you leave our listeners here today that might inspire and motivate them as they progress in their very own real estate investing career?
I think it's really just getting out and doing it, and putting in the work daily. Like I said, I mean, I have this whole big thing about work and life balance and buffer days and off days and whatnot. But for the time that you are putting into this business, this is your business, this is your brand. So you have to really treat it as such. So I'd say, for anybody who's sitting on the fence about things or who is discouraged, just take those steps daily to put the work in your business. And you'll sure be, a lot farther than the day before where you were. So it's really just about putting in the work and getting out there and making it happen every single day. That's where it's going to come from.
I love it, brother. Really appreciate you coming on here, man. How can our listeners find you? Where's the best place to track you down?
Do this Instagram. I'm under Real Estate Sterling on Instagram. And then Facebook is, I forget what my handle is on Facebook. Just look up Sterling Anderson. I think it's a picture of me and my kids in the pool or something like that. But yeah, you can find me there, or Sterling at redoakdevelopment.net.
Awesome, buddy. Well, Sterling, thanks for joining us here today. Wishing you and your family all the best with number one, staying warm, and number two, all your future real estate endeavors.
Thank you so much, Kevin. It's been a pleasure, man. Thanks for having me on.
All righty, guys. That's all we have for this week's show. And so until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.